Hi, Tom Kofer with OnPoint Consulting. Today we are very excited to be sharing some individual recorded learning sessions from our highly successful free OnPoint Sage 300 web conference that was attended by Sage 300 CRE users all over the country. We had 10 great web learning sessions over 2 days that were very well attended, and we really wanted to pass them on to you as part of OnPoint's continuing commitment to you, our Sage 300 users. You know, we we really want to bring you sessions such as the one today that addresses today's session addresses reconciliation and month-end best practices. So we had some key learning objectives that were and are to identify out of balance conditions and the necessary steps to resolve them, perform basic reconciliation tasks for AR, AP, GL, cash management, and also to find and launch the desktop reconciliation tool. And the reason we were able to deliver this successful webinar series, in my opinion, is because of OnPoint's deep pool of very experienced senior Sage 300 CRE consultants, trainers, software developers, and custom report developers. So we have depth and we have the resources to put on a national webinar like this and to help. So, in addition to our training and support and consulting services, we also provide Sage customers with what we call an optimization and business process review to help determine if Sage can be enhanced or if it should be replaced. We've helped hundreds of Sage 300 CR users over the past 30 years, and we're here to help you gain the maximum use of your software and extend the life of your investment. Bottom line is we are here to help. And if you do find it helpful, we hope you'll please like and share us on Facebook or LinkedIn. And also you can certainly find us at onpoint-software.com if you need help and you're looking to engage with us. We'd love to help. Thank you and enjoy this session with our compliments, and stay well, friends.
So y'all should be seeing my screen now. And so this is the reconciliation presentation, and we go through several of the modules to help get you reconciled. And so what we want to do in this session is identify some common reasons why you could be out of balance and help you find the necessary steps to help figure out what they are and also to fix them. We're going to do some basic reconciliation tasks for accounts receivable, accounts payable, job costs, cash management, and general ledger. And then also find and launch the desktop reconciliation tool. That will probably be one of the main parts there when we go into the software, because I believe, if you're attending this class, you've been in Sage, you've operated the system, and so it's mainly, for discussion. But please, if somebody needs me to go and show them something specifically because they don't know where it's at or whatever, please just put that in the questions area, and I'll be glad to cover that. So in order to understand how to reconcile something, we have to understand what the file structure is. And so the main types of data files that we have are master files. And those are where you go to set anything up, like the vendor, the job, the customer, the GL account, Those are all the master files. And then the transaction files are the things that are held for anything that you do under tasks. So when you put in an invoice or you go to job cost and do direct cost, enter estimates, you know, anything like that, those are held in the transaction files. Then there's 3 different types of those transaction files. We have the new file, which is everything in there that is unposted for that particular module. And it might have some stuff in there that came from other modules, but the fact is that in that particular module, those are not posted yet. Then we have the current file, which holds all of the posted transactions. And if you never move anything to history, that file will get quite large. So then we have the history file, and that's everything that you intentionally go out there and move it to history. And then there's the summary fields that are on the master files that hold the totals, your account balances, your job cost totals, the totals that you've purchased from a vendor in AP. And so those are just some of the summary fields. And then where does the data go? So the entries that you put in will flow from one application to another. And depending on what your post and interface settings say on what to do with that data when you're in a particular module, when it's going to leave there and go to another module, the post and interface settings say what you want it to do. So we can take a look at that. So in General Ledger, the entries that you make there, they don't go to another module. It's all just within General Ledger. So the application of origin is General Ledger. Prior to posting, when you're doing that journal entry, it's the entries are accumulating in the new.glt. So that's the new General Ledger transaction file. After you post, it goes and does 2 things. It updates the master.glm, so that's the master General Ledger master file is what the initials stand for. And it takes those entries and dumps them into the current.glt. And then if you decide to move them, whatever your cutoff or the specifics that you give it to move, then it'll go to the history.glt file. So if you're in accounts payable, the application of origin is accounts payable. Prior to posting, they are sitting in the new API file, which is the new accounts payable invoice file. And the type of entries that are in there are invoices and checks and manual checks. And so after you post, it will, of course, then update the master.apm. Then the transaction files that it does is it moves from the new API to the current.apt, which is the current accounts payable transaction file. So that's all within accounts payable, but then it also sends those transactions. Of course, it's going to have to go to the general ledger file. So it goes to the new.glt. And then it goes also, if something was charged to a job, it goes to the new job cost transaction file. If it was a check, then it also has to send information to the register.cmt, which is the cash management transaction file. And based on the settings in your accounts payable settings, what it does in general ledger, job cost, and cash management, whether it automatically posts or not, is sits in those accounts payable settings. And we will look at maybe take accounts payable. When we go into the software, I will show you that. And because it's basically, it looks the same in all the other modules also. So if you do a move of invoices in accounts payable, then it moves it to the history accounts payable transaction file and the history accounts payable invoice file. So there's two different files. But if you notice when it's in the current state, it's all in the transaction file because the invoices technically are kept in the accounts payable master file. So you see there's a API here. Hopefully you can see my mouse. The prior to posting, there's the API, and after a move, there's an API. But in the middle, there's not an API because it's technically in the master file. So when we're doing entries in job cost, like direct cost, miscellaneous worksheets, and then a lot of people are using accounts receivable now, but back in the day, receivables was done in job cost. And so if we did billings or cash receipts in job cost, then those are the kind of entries that originate in job cost. The data is held in the new JCT. After you post, it updates the master file with those summary fields that I was telling you about. And the actual transaction gets moved to the current file. And it also then sends information to the new GLT and the register CMT. Then again, if you move stuff to history, it moves it from the current file to the history file. So why does that matter? Understanding where your data goes enables you better to be able to fix it and to see what went wrong. And we also want you to do the best practices in the workflow. And it also makes it easier to correct the errors because maybe you're trying to reconcile, but I've seen a lot of CPAs, when you give them the reports, they don't have access to your system, so they're just going off of the reports that you gave them, but they're not balancing and they're spinning their wheels trying to figure out what's wrong and find this stuff. And all it is that maybe there was some entries that were not created, that was not posted in the general ledger. And that's why job cost is not balancing to the GL. So we definitely want to make sure that everything is posted in all the modules for up to the date that we're trying to reconcile. So some of the main rules of error correction is trying to do a positive or negative entry to correct within the application, especially if it's for a prior period or a prior year. You don't want to go back to a prior period, and definitely usually not back to a prior year, especially if it's one before the immediate prior year. And so that's kind of one way to do it. It's not really a preferred way. You can make the entry to the same debit and credit account to affect the application, but not the general ledger. So maybe it was some kind of power surge or something, and something went wrong. It's not anything that anybody did, but somehow the data did not get posted all the way through. And so you might just need to correct an application of origin, but the general ledger is fine. And that's where if you debit and credit the same account to general ledger, it has a zero effect, but it will get your application of origin in balance with the GL, just depending on which one is the one that is correct. And you could do that in cash management in the edit register, or job cost in the enter direct cost. And again, we want to correct the error in the application in which it occurred. And I wanted that twice. I have it at the beginning and I have it at the end of this statement. So if it's a accounts payable invoice, a specific invoice, there may be even 5 invoices that are wrong, that were coded wrong. Go and fix each one of those 5 invoices, and the change will carry on out through the system. It's not a lump sum change, so you can specifically see everything that was corrected, and the invoices are posted to the account that they are supposed to be posted to. So Lori, has there been any questions so far?
So far, there haven't been any questions, Linda.
Okay. All righty. So we can say that that guy has all of his questions answered. Okay, so reconciliation, the control is the key. We want to have a plan so that we know what everybody is doing and how we're going to go about it. Another thing is to reconcile throughout the month and reviewing your posting journals, because at the bottom of those posting journals, it tells you if it's not able to post something somewhere because maybe job cost hasn't been closed and brought forward far enough. So it's telling you right then and there that there might be an issue. And I don't think it's anywhere else in this presentation, but job cost will post 1 month into the future, and general ledger will post up to 6 months in the future. So if either one of those get too far behind, it is going to start rejecting the entries and not letting them post, and they're just sitting in the new file. And that's why monitoring your new file as far as what is in there is very important. There is a thing that we call the soft close to help control the data input. If anybody has the My Assistant application, the third-party software, it can monitor your module settings. So if somebody goes in and changes something, it will send you an alert. Looking at your tie-out reports to cross-check your data, just making sure everything is in balance. And then a control sheet to keep track of where you're at and what's been reconciled and who's doing it, who's responsible for it, will all help in the reconciliation. So having a plan to determine the steps and the task that you need to do. So this can be on that spreadsheet. We do this each month over and over again, and then they can check it off when they've done that. Who's going to be performing them, and then especially what order they want to be done in, because you don't want to start looking at general ledger and trying to reconcile that to accounts payable or job cost if you haven't looked in accounts payable or job cost to make sure that everything has been posted from the new files, because it won't ever balance to general ledger if it's been posted in general ledger but not in job cost. So the order is important, and then have your checklist. And then that checklist could be one of the documents that is sitting on your favorites. If you have a grouping on your favorites, and I'll write down, I'll show you favorites, what I'm talking about there. Can be on your favorites if you have a grouping like month end, and I want to print this report, this report, this report, and look at this spreadsheet. There can be a link to that spreadsheet. And that's one of the things I talk about in, I believe it's the next session, which is the tips and tricks. Also, what helps if you reconcile throughout the month, if you're prone to having issues at the end of the month, then you might just want to do a quick check to make sure that AP is in balance with GL, AR is in balance, you know, a few times a month, because it will minimize what you have to, the number of entries that you would have to look through and stuff to find out what's gone wrong. And so if it's gone wrong the first week of the month, and then you do this certain thing several times a month, you don't want that person doing that same thing 3 and 4 times during the month, and it just causes a bigger problem. So if there are routine entries, you can use automated entries in general ledger to perform like depreciation entries, allocating insurance entries. Put those in the recurring entries, then somebody's not having to type them in all the time and maybe putting it to the wrong account. And like I said before, check the new file for unposted entries in job cost, cash management, and general ledger. And you might say, why is it only those 3? So when you're in accounts payable, and accounts receivable, if it is not posted there yet, then entries haven't gone to these other modules to be able to be out of balance with accounts payable and accounts receivable. So if it's never posted there, then it's not an issue. But once it's posted in those, and also the payroll, those are your three main originating modules. So once it's posted in there, we need to make sure that it populates and posts in all the other modules. And then balancing AP and AR to general ledger during the month. So you can check periodically, daily, weekly, all of the modules to ensure that everything is getting posted, because you have your choice of being an automatic posting in the settings or a manual post. And some people put it on a manual post, let's say to general ledger, and because they tell me, well, they want to check to make sure that they're correct. And I can definitely understand that. But if it was okay to post an accounts payable, when it sends those entries to general ledger, what changes? Why all of a sudden is it not okay to post it over there? So my favorite is the automatic posting in the interfacing applications, because you would do your correction or your double checking where everything is going. You do it in the application of origin anyhow. So just let it go ahead and post, yes, right or wrong, but you would be in balance. And then if you found any mistakes as far as what GL account it went to, then go fix the invoice. And again, if you have Setup Assistant, it can alert you if something is in the new file. So, and then this just helps reduce the amount of effort required at reconciliation time. And the automatic posting, that probably takes, 98% of you having to go in there and post. It takes care of 98% of that. And it doesn't hurt. You can go in there and post, and then later on in the afternoon post again. It's not going to hurt anything. So the soft close, what it does is just safeguards the month that you're reconciling. Because if you've gone around and you've asked everybody, are you done? Are you done? And they say yes, but then they think, oh, well, she's walking back to her office. I can go, put another entry in or something. But when you do the soft close, it locks it down. So you lock down your previous data so that no one, even including yourself, can write to the month that's being reconciled. So it just makes it a little bit more difficult. It's like already making it a prior period. You have to go out there and uncheck it in order to post to it, and then check that month again to say that it's closed. So it's a way to protect your last month's data being written to without performing a final close of the month. So you're not officially moving your current month from one month to the next. You're just putting a check mark there that locks it down, so it is treated like it is a prior month. So one of the first things that you want to do after you've made sure that everything is in and you have made sure that everything from all of the new files has been posted, then what you can do is in here, and let me make sure everybody saw where that was. So in General Ledger, the task, open, close, posting period, and that's the current month that you're in. So you'd put a check mark in that box right there. So you haven't officially opened up February yet, but you have locked down January. So you can do and pull all your reports. You don't want to start pulling reports and then people are still entering to it. So another thing that you want to verify is that allow entry to a closed period is not marked. So, because what that does, it doesn't let it post, but it lets people make an entry to that month to where when it sends it over there, it'll sit in the new file, but because you have all these entries out there, then for that month, it's like you have to open up that month and let them post. Doesn't say what closed period, so it could be, 6 months ago, they would be able to make an entry to that. So we do not want that to be check marked. And these here, the ones with the red circles are marked the way that they should be. Automatically close a period, which means on that open close posting period, that when you roll it to the next month, it makes sure that there is a check mark in that month that you just rolled out of. So it automatically closes that period. And then allow entry to a closed period is not checked. The ones in yellow are the ones that you wouldn't want them to be that way. The 4-0 proof is by project on this one, but you really want it by entity. And then also edit transactions created outside of General Ledger. Usually, now there may be some times when we need to go in there and fix something, we'll turn it on, but then we turn it back off because as a normal operating procedure, we do not want that checked. So that would allow you to change the GL accounts that they're going to, say for a accounts payable invoice. When that's checked, you can change the account that it goes to. So then you have a discrepancy between what General Ledger says and what accounts payable says. Everything is still in balance, but they're going to two different places. So we do not want that one checked. You can create some tie-out reports. Everybody has their own way of looking and analyzing things. So, if you wanted to modify one that's out there, you could do that or use some of the ones that we're going to have listed here. But we want to make sure that everything is in balance and the financial statements are agreeing with one another. And with that, just making sure that you know that the financial statement, we usually think of it as just one thing, a financial statement, but it's actually two separate designs. We have the balance sheet, then we have the income statement. So generally what you look at is you're looking, does my balance sheet balance? And then also my net income for this year, is that what it says on the balance sheet? Because there can be some stuff wrong in the design of those financial statements. It's not that your trial balance is out of balance, but it's your financial statements are what is wrong. So you want to make sure when something comes up wrong and you said, oh, well, I hadn't seen that before. It might just be the report design of the financial statement to begin with. So some of the tie-out reports that are out there in accounts payable, there's a period end report for accounts payable accounts. There's also one out there for retainage accounts. In cash management, the reconciliation report. So after you reconcile your bank, print that reconciliation report. And I usually print it along with, I go and get my current ledger for that bank. And so the bank reconciliation report, the adjusted balance there should agree to what your general ledger, your current ledger says the ending balance is. And sometimes the report out of cash management can get messed up sometimes. And so we just have to go in and clean that up every once in a while. In accounts receivable, there's a detail by customer, and then general ledger, the trial balance, and there's actually two reasons that could be out of balance. One of them, because it truly is out of balance, we don't have the same amount of debits as we do credits. There's, like a totals by batch is one of the reports that you could look at. But a second reason is that if somebody went to do an entry for the prior fiscal year, went out there, opened up, say like December, made the entry, closed it back up, December financial statements and everything looks fine, and then they go on. But what they forgot to do is to reclose the year, because if you open up last year to make an entry, you have to close the fiscal year again, or this year's trial balance will be out of balance by that dollar amount until you do that. Because when you close the year, it rolls those entries into retained earnings. So what you're going to have is an income statement account that actually has a beginning balance for the year. So again, this control sheet that we were talking about lets you know who's doing what and where you're at, how many times you found an error, only to find that someone, perhaps even you, entered something into a previous month after the financials have been printed. So we always want to know who's doing what. So any questions? Lori, have any questions come in?
Yes, we do have a couple of questions. The first one is, could you please restate the time restrictions on posting?
Okay, so I guess they're talking about how far in advance it would post. So job cost only post 1 month into the future. So what month are we actually in? We're still in April. So if my job cost was sitting in the month of April, it will post everything for May. But if I don't move it and I start having June transactions, it's going to start rejecting them. So you might be giving out some job cost reports and it won't have everything on there if you're only going with the current file. And General Ledger will post 6 months into the future because they understand General Ledger, you may be 2-3 months behind, but you still want to be able to look at things posted out there as the months go on. But once you start reaching that, if you are, the 6 months behind, then you are going to start running into rejections for that 7th and later months. Any other questions, Lori?
Yes, Linda, we have another question, and it is, which balance from the bank recon report should match the GL balance, the adjusted bank balance, the register balance as of statement date, or register balance adjusted for future period?
Okay. So it's usually the bottom number, and it's I'd have to actually look at the report if it's called adjusted on that bottom line, because usually the one for adjusted for future voids is not there. The only time that you would have that, and on your bank reconciliation, you would see a listing on the right-hand side of voids and then the date that they were voided. So if you're trying to do your April reconciliation and you have some future voids out there, but it says that they were voided in the month of April or before, go ahead and clear them, because we don't want that to be adjusted down the bottom, because it was voided by the end of April. The only voids that you do not want to clear are the ones that are voided in May or later, because we need that information to be able to balance. Because if we went ahead and cleared them, then your bank reconciliation is not going to agree with General Ledger. So usually on the bottom, you have 2 numbers. And forgive me, I'm trying to think of what the actual, what they call those, the name fields, but there's 2 numbers at the bottom, and those 2 should be the same number. And those are the numbers that should balance to the general ledger. Were there any other questions, Lori?
No, there were no other questions.
Okay. And I'll write down, maybe we take a look at the bank rec. And I've got, how much more time? Hour and 15, Lori? I'm pretty sure that's. So reconciliation features that Sage has is on the Sage desktop, there is additional tools and in the reconciliation, and the application, the different applications that that reconciliation tool has is accounts receivable, payable, job cost, cash management, and general ledger. And we will go out there and look at that. So then the different sections, there's kind of like a dashboard out there that is a quick overview of your reconciliation status. And then it takes you through the basic steps, posting, the verification, summary reconciliation, detail. It will even list some common causes of an out of balance situation. And then it also has links to some period end reports. So these here, it goes module by module. Try not to make it too boring here. But in accounts receivable, you want to post all the affected applications. So billing, you want to make sure accounts receivable posted, and you want to make sure general ledger is posted. And then you can print an AR summary reconciliation report. And if you're in balance, then you're done with that module. And there's, you know, whatever report that you like. I mean, just for this step, I like to do the summary by invoice. You know, maybe on a month to month basis, or when you're really looking at stuff, you might print it by job, or, you know, have some other reports. But just for making sure that you're in balance, you know, just a summary report will do. But you can also double check the report that you usually do to also make sure that that report is in balance and has the same outcome, because, you know, you can modify these reports. And so if you have modified the report, we want to make sure that you're staying in balance. So if you're in balance, you could skip to step 7. But if not, then you need to start looking at some more detail. And there's totals by batch to make sure that all of your batches are in balance. And some common causes, just unexplained entries might have gotten into general ledger, causing you to be out of balance with AR. Maybe on the general ledger side, there's some unposted transactions. When you did an entry in accounts receivable, maybe somebody changed the AR account that it was going to. And so there's some reports out there that will show you what the accounts receivable account was. And then unapplied cash receipts. So if you entered a cash receipt and it's sitting out there, it's in a liability account because you haven't applied it to an invoice yet. So in order to balance to that accounts receivable report, you have to take the accounts receivable account plus the liability account in order to reconcile to that accounts receivable report. and then repeat running your reports until you get the difference reconciled. Then you'd want print your period end reports, whether you do the AR aging detail by customer, or your favorite report, or there is this period end report in accounts receivable as you're reconciling reports to say that yes, you were in balance. And so then the common causes for being out of balance, you can look over the common causes in the desktop, that additional tools feature. Maybe there was an accounting date error. If you were conditioning some reports and you did accounting date versus a transaction date, something like that. So accounts payable, we go through the same thing. We want to make sure that all the entries are posted between accounts payable and general ledger. Do your verification, open invoices report, or when you want to verify to a particular date, you need to have that cutoff date, which says show me everything that was open up to end of April, and that is your cutoff date. And so there's some summary reconciliation reports out there. There's a AP summary report and a retainage summary report, because a lot of times those two are two different accounts in the general ledger. So then you can stop here if you're in balance and skip to number 7. If not, there's the totals by batch report and retainage totals by batch to see if there's a batch that is out of balance for some reason, and then you would go and research that batch. Again, unexplained entries in the general ledger, so you wouldn't want to make a journal entry to one of the accounts payable accounts, because that's going to put you out of balance right off the bat. An entry spanning 2 accounting periods, and then also unposted transactions. And then again, repeat as needed until it's been cleared up. And then reports to file. Again, I like the open invoices with a cutoff, but there's also the period end report for accounts payable accounts and period end report for retainage payable accounts. So common causes, you can look at that desktop reconciliation, and then change invoices with accounting date change. Because sometimes when you go out there and you make a change to an accounting date, there's that little question, which date should be used for the reversal? And if that question is answered incorrectly, then it's going to put you out of balance, because now the transaction has one date on it, but it didn't zero out the old date because of how that question was answered. let me see if I can have you picture this. You put an invoice in, let's say, in March, and then, but it really wasn't supposed to be until April. So you go in to make a change to the accounting date, and you move it to April, and then it says what date should be used for the reversal, the original accounting date or the revised accounting date. And since we're not in a live classroom, usually I would ask, what do you think? But it would be the original is for the reversal because it went there to begin with in March, and now the reversal comes into March. So it zeroes out in March and it ends up in April. But if that question was answered wrong, the it's still left in March because the in and out would have been in April if you answered it wrong. So Lori, has there been any questions?
There are 3 questions. I'll read them to you as they are stated.
Okay.
The first one says 2 lines are. The second one says XX/XX/ and then XXX 4 X's, adjusted bank balance. And then the third one says register balance as of statement date. And they are all from the same person.
Okay. So read the first one again.
Sure. It says 2 lines are semicolon.
I'm guessing this is all talking about the bank reconciliation. We'll go in and we'll pull a bank reconciliation report and to be able to look at it. So what was the second one then?
The second one just had a date, a fake date with all X's, 2 X's / 2 X's / and then 4 X's like for the year. And then
A
it
month,
said
day, and year.
yes,
Okay.
adjusted bank balance. But
Okay. We'll go into pulling a bank reconciliation report, and because they might be talking about balancing to the master file on that or something. So yeah, so we'll go in and then pull that up, and maybe if they can type in then if that's what they were talking about. So I will pull a bank rec. So was there another question or just that?
it was a register balance as of statement date.
Oh, that's the balance at the bottom of the report. At the bottom of the bank rec report, register balance as of statement date.
And those were the only 3 questions.
Okay. So when we look at the bank rec, then we should hopefully get that resolved. And then again, I'm dealing with sample data here, so I hope it's all in balance. Okay. And so we have till what time, Lori?
We have until
9:45 or 10?
9:45. We have until 9:45, and I'll give you a 10-minute heads up before I'll cut in at 9:35 for you.
Okay. Yeah, I just want to make sure I have enough time to get to that. So,
Well,
okay, thank you.
you're welcome.
So, in job cost, we repeat ourselves again here, making sure all the entries are posted in job cost and general ledger, because in job cost we put a little bit different scenario in here. Job cost receives entries from accounts payable and accounts receivable, and payroll. So, but mainly the AP and the payroll ones, if they were posted in accounts payable, let's focus in on that one. The entries, when it posts in accounts payable, it sends the entries to job cost and it sends the entries to general ledger. So if it went from accounts payable to general ledger and all that is posted fine, but you have something in the new file in job cost that came from accounts payable, then job cost is never going to reconcile to general ledger because it knows of that accounts payable entry over there, but job cost does not. So from the application of origin, it sends out to the different modules from there what needs to get posted. It doesn't go from accounts payable to job cost and then to general ledger. The application of origin sends it out to all of the different places. So I want to make sure all the entries are posted. And then there's a closed month validation report that you can pull off of costs. And then there's also a JC summary report, but you need to make sure that you're pulling a summary report that has the cutoff date. And if you're in balance here, then you can proceed. If not, then some of the detail reports are job cost totals by batch and job cost general ledger totals by batch to see, if one of those that there's something the totals aren't in balance for the batch. So common causes, unexplained entries, in general ledger, but also could be in direct cost that somebody put an entry in there and maybe overrode the debit account, because keep in mind in job cost, the debit account always goes with the job. So if your retrieval method is category and you said labor goes to 5,100 and somebody said, oh, I don't want it to go into 5,100, I want it to go to 5,300. Well, they shouldn't just change the debit account. They want it going to 5,300, probably change it to material, the category, because that's the one that goes along with 5,300. So there's certain times if you do not have purchasing, you can lock down the ability to override the debit account. Also, unposted job cost transactions. And then again, the wrong account override. So repeat that as necessary until you've found everything and it gets down to being in balance. Then your period end reports is a GL reconciliation report. And this reconciliation report, it lists by GL account all of the transactions. So it can be a lengthy report. What I have done for most of my customers is I've made that a summary report. And because if a particular account is in balance with the general ledger, according to that report, we don't need to see all the detail. But if there's one that's out of balance, we can go and look to see what the detail says, and making sure that in general ledger that there was not an entry charged to that cost of sales account number that did not have a job to it. And you can check that out in general ledger just by doing an inquiry on your particular cost of sales accounts and conditioning the detail to that the job is equal to blank, meaning it's in there, but it has no job along with it. That right there automatically should not be in there. And then if your WIP report, if it's going to an asset account, and then your as the job closes, if you move it to your cost of sales, then that's what you'd want to use your WIP account on that. So common causes, look over the reconciliation desktop for common causes. AP invoice coded to job cost, GL account without a job number. That's what I was just talking about. And that's why a lot of times on the descriptions of my cost of sales accounts, or I will lead them off by COS-labor, COS-material, whatever your categories are, if your retrieval method is by category. But whatever your job cost accounts are, they are led off by COS. And then you train people that are doing your entry in accounts payable. If they have to choose a GL account number because it's not going to a job, do not choose one that says COS, because that'll put you out of balance right away. So then also what I had said before was a direct cost entry created with the default accounts overridden, meaning changing that cost of sales account number. So cash management, post all the affected applications. So make sure everything's posted in cash management and general ledger. Bank account balance verification report. Then the cash management summary report. If you're in balance there, you can go on. If not, there could be unposted transactions. Also, there's transactions could have been entered directly into general ledger for the cash accounts. So your cash account should be treated just like any of the other control accounts of cost of sales or accounts payable or accounts receivable accounts, you don't post directly to those accounts. You also do not do an entry in general ledger for any cash account. Like if you wanted to post your interest or service charge, you do not do that in general ledger. You have to go through cash management to do that so that you have a reconciling item with it. Repeat is needed, then reconcile your bank statement. And then your period end reports is the bank reconciliation report. So the common causes, looking at the common causes on the desktop reconciliation tool, these are KB numbers, they're bulletins. And so if you're on the knowledge base, you can pull up these KB numbers and get a detail of it. Enter credit deposit without using AR. Trying to think of what that one is. Also, if you've reconciled a transaction that has a future date, it's counted as being reconciled for this bank reconciliation, but it's not part of the balance that you're looking at. If it was in May, but you're reconciling April, that would cause a problem. So there are some things that you can open up in the CM settings, and it's allowing the status change on a transaction. So if somebody got in there and opened it up and you were able to make something open from a reconciled status, that's going to cause your reconciliation to be out of balance. A check is voided with a future date, and then the register balance is not correct. That's where I was saying the cash management, the master file balances can get out of whack sometimes. So there's a bulletin on that, but we just go in there and fix it. And it's not that the data is wrong, it's just that some of those fields didn't get updated correctly. And then you also need to think about the payroll's accounting date when that hits cash management. So in general ledger, we want to make sure that all entries are posted from AP, AR, job costs, cash management, and also in general ledger. Look at your current ledger to make sure that it's in balance, and then the GL summary report. And if you're in balance there, then you can proceed. But if not, you want to look at your totals by batch report. So maybe somebody got in there, was able to make an entry, and the batch, the debits didn't equal the credits. Some of the common causes, entries been made to a prior year and haven't been closed out yet. That's going to put this year out of balance by those entries that were made. And entries spanning 2 accounting periods. And then an intercompany discrepancy. So anybody that has multiple companies out there, maybe, it was done on one side, it wasn't done on the other. So you want to make sure your intercompany is in balance. And then we get kind of towards the end of the day and we lather, rinse, and repeat until we have our difference down to 0. So period end reports, you'll run your trial balance, current ledger. If you wanted to do your year-to-date ledger on there, I guess should have put financial statements. Common causes, looking at the desktop additional tool feature. There's adding a new account. If that account was put as the wrong type, or on your financial statement, if it wasn't included on your financial statement design, and also in my tips and tricks, I go into something that we can do to help alleviate that. Also, if there's entries in the suspense account, your trial balance is going to come up to be in balance, but your financial statement should be out of balance because the suspense account is not intended to print on the financial statement, because we want you to definitely see that there's something wrong. The report totals are not coming down to 0, your trial balance. And then if you had previous year's entries, like I'd said, if you do not close the prior year again, then this year is going to be out of balance by that. So again, does that lead to any questions?
We have one question, and
Okay.
can you restate which voided checks should be cleared on the current bank reconciliation?
Okay. So when you're doing a bank reconciliation, you're going to go through and obviously clear all the checks that are on there, the deposits, and you might be done with your reconciliation. It's in balance, and you get out of it and you print your bank reconciliation. And so everything is good, but you see these voided checks out there. So you need to clear the voided checks. So you would go back into doing a reconciliation. Your beginning and ending balance would be the same. And then you're still using, let's say it's the April 30 bank statement date, and clear everything. So we're using April 30. So any check cleared on or before April 30 is okay to clear. But anything after the April 30, so anything voided in May, you would want to not clear it. because we need just that dollar amount information to retain on there, so that at the bottom, that adjusted for future voids balances to our general ledger.
And you have another question.
Okay.
She wants to know if you can go back to the slide with cash management reconciliation steps 4 to 7, just so she can see it for a second.
Okay, cash management. Okay, seconds up. And I'll leave it on there. When you don't have anybody talking back to you, you can. So I believe this is the one that they were talking about.
She said, perfect, thank you.
Okay.
And
Was
all.
there, okay, that was
No other
all.
questions. That was it.
Okay, I think, yeah. So here, so this, we got about 20 minutes. I want to get into the software to show you some of these things that I said that we were going to take a look at. But as far as for the presentation, well, yeah, because once I get out of, well, let me see. We'll just go over here and come back to the presentation. Okay, since the bank rec thing, so reconciliation, bank reconciliation. Before I get to that one, there's this one right here, CM balance to GL. I should have put that one on there. This is one that it gives you balances as of right now. And again, this sample data, I haven't looked at it in a while. I don't know what it's going to tell me, but well, I am in balance. This is a nice little report. It will list all of your bank accounts, and it shows you the cash management balance, and it shows you the GL balance. No matter when it is, I mean, this is as a today balance out there, and as long as everything is posted in general ledger to this account, these two should always balance. So if you make sure everything is posted in GL, these two will be balanced. I forgot about that report. So now, for the bank reconciliation, oh goodness, this is back in 2013, I think. Okay, so this is your starting or the statement ending balance, then all of your open checks, your open deposits, open withdrawals. Also, when you're looking at this, so these are deposits, and if I'm reconciling, what did I put in there? May. I'm reconciling the end of May. I shouldn't have any April deposits still outstanding. So actually, look at what it's telling you. It may be in balance and it may be just fine, but maybe there was a deposit that was entered twice out there. One of them got cleared, in April when it was supposed to, but these are sitting out there because somebody entered something again, but they really shouldn't be sitting out there if they were in April. So then these are the first set of totals for First Bank, but then these are the two. They should be the same. So the 5/31 adjusted bank balance and then the register as of the statement date, they should be the same. But if you had, let me go back to so if you had some checks out here, let's say the $6,600 was voided, it would be listed over here, voided amount, voided date, and cleared date. So the voided date, if it says, since we're doing May, if it says May or before, go ahead and clear it and get it off of here. But if it's June or after, we need to keep it here, because then down here, there's going to be a number in between. Whoops. There's going to be a number in between there that's adjusted for future voids. And then it would be your register balance as of the statement date that would balance to the general ledger. So the one that had the questions about the bank statement, if you can just type in the questions there and make sure that that answered your question. Okay, so we did that one. So the favorites that I was talking about is this area over here. It's the My Task. And like this is a grouping here. So if you right click, you can add a new group. And let's say it's monthly closing. So I can drag and drop different things from the menu that we want. This report, this report, this report. And then there's that spreadsheet, the control sheet that can be out there on the network somewhere, but you can have it added over here so that you're just going down the kind of like a checklist here, printing all these reports for monthly close. When you're not using it, you can just roll it up and it look like this. Otherwise, then it would list all your items underneath there. The additional tools, the reconciliation here. So here is the period end reconciliation. There's the dashboard that we were talking about. So it asks for what month you're closing. Whoops. So this is has all the different companies out there. Let me see if I can get that little thing to stop. And then how much you're out of balance in there, and then your accounts payable, So for company 10, it's fine. 21, that's fine, but subcontracts, it's red. It was showing out of balance, but the difference is 0. So then that was that CM balance to GL report that I had pulled up and showed you. So that's the little dashboard kind of showing you a snapshot for a particular period end. It's just a crystal report. And then these are the procedures for each module. So if we clicked on here, it has a link to posting entries in AP. So if you clicked on that, it's just taking you to post invoices is all that's doing instead of having to go to the modules. Also, it'll take you to GL post entries. This is the data verification reports out there that we talked about, the summary reconciliation reports. These are just links to those reports. So if you're not in balance, then going on down to the detail reports, and then here's the common causes of why it could be out of balance. So for each one of those modules, it has this area on there. So as you see, it opens up another little tab. So let me see if I can move my side panel out of the way to close that one. So the little, I don't know if you can see it, the little X over there closes these different tabs. So a lot of people don't know that this is there. It's just additional tools. If hopefully they're using the desktop by now, but you know, it just might have been there and not paid any attention to it. But there are some different workflow centers and all. So it's a kind of reminds me some of these areas of
Excuse me, Linda.
QuickBooks. Yes.
I'm just going to give you your 10-minute warning. We have 10 minutes till the end of the session.
Okay. Thank you very much. So they're little workflow centers, I think, remind me of QuickBooks, but here you can enter invoices, select them, pay some additional tasks, setup tasks. So that is out there under additional tools. And then one of the last things I wanted to show you was in the settings. So we have under each module, there's that module's settings, and they all pretty much look the same for the interfacing, the post-in interface right here. It will just list the modules that this application interfaces with. So up here, yes, having that set to manual so that you can enter invoices and then check them before you actually say that you want to post them. But once you do post, my favorite is to have these on automatic. Like that. So if I say to post in accounts payable, go ahead and post over in job costs. Go ahead and post it in general ledger, equipment, and the billing module. Cash management is always on an automatic post. But that way that takes care of, 98% of your posting. You still have to post things like if you go in and change coding on an invoice, make some kind of reversal like that. Those are things that still don't automatically post. And so you just want to check the new files. But this will definitely help in all the modules if you go to the post and interface and see how it's set here, and definitely leave both of these check marks, the way that they are, because that's what makes it live and telling it to talk to that module, the create entries. So those were the things that I would show you over there. So in this session, we learn, basic reconciliation tasks for accounts receivable, accounts payable, job costs, cash management, and general ledger. Identified some of the common reasons you might be able to balance and execute the necessary steps to solve them. And then we located and launched the reconciliation tool. So you're done. You did it, and you get 2 thumbs up. It's great to have you here, and I'm gonna, I wish we could have communicated back and forth a little bit more. Lori, did you get a answer back? Was that bank rec thing?
Yes, she said, perfect, thank you.
Okay, all right. That's what I thought she was talking about, but just wanted to be sure. So good job, y'all. And I will turn it back over, I believe, to Barclay.
Thank you, Linda.
You're welcome.
I just want to thank everybody again for being here. We really do appreciate your feedback, because we would like to continue to offer sessions on valuable information that you want to hear. So please watch for an email. You'll be getting one over the next few days with a survey. Also, since there wasn't a lot of, you weren't able to interact with Linda, and since we're virtual, you're not going to be able to stick around after the session to ask questions like you would be able to in person. Feel free to email us additional questions at clientcare@onpoint-software.com, and we will get those answers back to you. We will also get you a copy of Linda's slides along with the recording of the webinar. And lastly, if you need additional information, you can visit our website. We have our free Sage 300 CRE procedure guides that you can download, and also additional webinars and videos available. And of course, if you need additional help, we're here to help. So you again, contact us at clientcare@onpoint-software.com. Everybody have a good rest of your day. Talk to you soon.